Hi, when I started out investing, I used to hear lots about the S&P 500 and the FTSE 100, and I didn't really know what it was all about. In this video, I'm going to give you a quick run through of what those two stock indices are, have a look at the market capitalisation, explain what that is, bit on some of the companies that make up those different indices, and then a quick whistle-stop tour through performance and where you could potentially buy them. Welcome back to the channel. If you're new here, hi, I'm Mark of Desperately Seeking Fi. The FTSE 100 and the S&P 500 are both well-established stock market indices that represent the performance of large companies within their respective markets of the US and the UK. The FTSE 100 is the index of the largest 100, or actually 102 companies listed on the London Stock Exchange, while the S&P 500 is the index of the 500 largest, and yet again it's 503 largest companies listed on the exchanges in the US. Both indices are basically benchmarks for their stock markets and performance of their respective companies. Why do they have a couple of extras? Because some companies have two categories of stocks. For example, you have Alphabet and Berkshire Hathaway on the S&P 500 have two different types of stocks. Market capitalisation. So this is how much are all of those stocks that sit within the different indices actually worth. So if we have a look at the FTSE 100, the market capitalisation is just over $2 trillion. That's an awful lot of money. And when we scale that up and do the quick exchange rate, it's about 2.4 trillion. When we then look at the S&P 500, it's weighing in at $33.8 trillion. A big difference, about 14 times larger. And I know we're going to say FTSE 100 only has 100 companies and the S&P 500 has 500. But we are still looking at, even if you scaled up the FTSE 100 to have 500 companies, you're still looking at about 3 times larger market capitalisation. Let's put this into context. Apple, the number one company on the S&P 500, is worth almost $4 trillion, which is exactly the same value of all the companies within the FTSE 100. So that just shows you scale. Before we actually get into the different stocks that sit within those two indices, let's have a look at how they are spread out across the different sectors. FTSE 100, very much cyclical types of companies that sit within the consumer staples, financial and healthcare side of things, with some big energy companies punching those numbers up. And let's have a look at who they actually are. The top 10 of the FTSE 100 make up 50% of the whole index, and you've got some titans in there like AstraZeneca, Shell and your Unilevers. Take in comparison the S&P 500, and very tech heavy in this indice, with almost 26% just coming down to the IT techie kind of setup. So you can see these are far more growth, whereas the FTSE 100 are more cyclical, stable, and sometimes you might call them boring. On S&P 500, those big three tech giants of Apple, Microsoft and Amazon leading the way. We've seen Facebook, Meta and Netflix all fall out of this top 10. And the companies keep changing. It is an ever-evolving process. There is a committee that sits and agrees who comes on to the S&P 500. And at this time, it's actually 504 as of the end of December last year. What does performance look like when you marry the two up side by side? You have in the yellow line the S&P 500 and the FTSE 100 is in blue. Let's have a quick look over the last month. Not really very much in it. Over the last 6 months, because of the types of companies that we've got within the FTSE 100, more stable and possibly pushed a little bit by those large oil companies making lots of money. FTSE outperformed tech-heavy S&P 500. Out to a year, once again, we know that 2022 tech stocks got absolutely massacred. At 5 years, you see FTSE remaining relatively stable, only about 8% up, whereas you've got the S&P 500 just coming in at under that 10% growth per year. And you can see where you've got the COVID-19 drop. Yes, a larger drop potentially for the S&P 500, but look at how much it has taken off. But also the volatility when we then hit the start of 2022 and you see the S&P 500 drop off. If you had invested the same amount of money 5 years ago in the two different indices, you would have had higher returns, but a much bumpier route to that point if you'd invested in the S&P 500. I do invest into both of these indices, both the S&P 500 and FTSE 100. And I am probably slightly heavier weighted towards FTSE 100 at the moment because of what has been going on over the last year. I just saw that the whole crypto market crashed at the end of 2021, and that sort of filtered into the tech stocks in the S&P 500 being pretty heavily hit last year, and we can see that from that last chart. Also, the FTSE 100 pays a dividend of somewhere in around that 4%. So I went for a bit of safe haven in those cyclical kind of stocks that existed there. I suppose I will be looking at shifting and going back more into the S&P 500 side of things, like 10 or 20% in just a standard index tracking ETF, something like Vanguard's FTSE 100 VUKE, and I've done a video on that. I'll link that down below. Or you could just go and put about 80% of your money into something like the Vanguard S&P 500, so VUSA. Also got a video on that. But you could invest into those and just steadily leave your money to track along. What is good about both of those is they are low cost index funds. And that's what I like. I want to have diversification across my portfolio, and sort of having a mix of both of those certainly helps me do that with 600 of the largest companies in the world covered by those two different ETFs. Why don't you have a look at this video that talks about the best ETFs? I think that would be quite useful to you. So thanks for watching. See you in the next one. Cheers. Bye.